Welcome back to Morning Markets on Tuesday, the 11th of May. George Bell here, investment analyst, to bring you up to date on the key market moves over the last 24 hours. Turning first to equity markets, looking here in the UK, the FTSE 100 was down 0.08%, FTSE 250 was down 0.34%. Over in the US, the S&P 500 was off just around 1%. Nasdaq was down around 2.55%, which we'll come on to very shortly. Russell 2000, so small cap, was off around 2.6% on the day. Within Europe, Europe was down around 30 basis points. In Asia, Asia was down around 80 basis points overall. Looking in the bond markets, the UK 10 and 30-year gilts, the yield was up 1.3 basis points and 1.5 basis points, taking the yield on a bond with 10 years to maturity to 0.79 and 30 years to 1.33%. In the US, 10 and 30-year Treasury bonds were up 2.5 and 5 basis points overall on the day, taking the yield to 1.6 and 2.33%. Global aggregate bonds in terms of total return were off around 10 basis points in total there. In terms of commodities and precious metals, you had oil, so Brent crude, which was off around 10 basis points, taking the price of a barrel of oil to $68.2. In terms of gold, gold was actually up 26 basis points, but silver was down 52 basis points. In terms of currency, looking first at the dollar on a trade-weighted basis, so the Dixie index, which we often refer to, was actually up 0.06%, so taking the Dixie index to a level of 90.3. In terms of sterling on a trade-weighted basis against a basket of international currencies was up 0.12%. But just looking at cables, so sterling against the dollar, that actually reached 1.41 on the day. And in against the euro, sterling against euro was 1.16. So it's a strong day for sterling yesterday overall relative to the dollar, and the euro was up around 1% against the dollar, around 1.2% against the euro. A lot of things feeding into that within the currency pairs. One of these was the moderation of expectations around a second independence referendum in Scotland, at least in the near term after last week's election results there. On the day, the most significant moves were experienced within the US tech sector. I mentioned there the Nasdaq, which was down 2.55% on the day. That was really given consumer expectations around inflation after the Federal Reserve Bank of New York April survey on consumer expectations came out. Within the survey results, the response highlighted that consumers anticipated inflation levels to reach around 3.4% 1 year from now. That's around 0.2% higher than what they were expecting back in March. They also anticipated a real wage decline, with growth in income levels to fall short of inflation rates, so wage increases to rise around 2.4% over that period. Tech names were more sensitive as inflation presents a potential headwind towards earnings there. At this point, the market is considered to be paying a higher price for earnings growth than they have at any point over the last decade. So one of the areas which we often look to here is the price to the earnings ratio, which is currently at 30 times for the S&P 500. 10-year average is around 16 times, so hence the sensitivity which you're seeing within the US at this point in time. For context, the Fed's target rate in inflation is around 2%. However, they operate what we call a flexible average inflation target framework, or FAIT framework. This enables temporary periods of overshoot. Guidance from the Fed, however, has aimed to moderate inflation expectations, which started to pick up in February and reassure markets that they've got the tools available to bring inflation expectations down to mandated, consistent levels should they be needed. We'll get a better insight tomorrow of the current position from April's CPI year-on-year inflation prints. The current consensus expectation is around 3.6%, but note this is reflecting base effects, as we can see on the chart now, after the rate fell to 0.3% during the first lockdown period, as demonstrated on screen. Here in the UK, and another example of base effects can be seen in the UK BRC retail sales data, which was reported there this morning. This demonstrated year-over-year growth in total retail sales values of 51.1% in April, up from 13.9% in March. So it's a significant number, but again, it's demonstrating where we were this time last year. And as we've discussed, not all of this will be going back to the high street straight away. In terms of sticking with the UK, looking at the house price index, we had the Halifax House price index up 8.2% year on year in April, up 1.4% month on month from March. This has really benefited from the low interest rate environment which we are in, the extension of the stamp duty holiday beyond March through to September, increasing the overall demand for property here in the UK. For all of us, I'm sure Boris Johnson's announcement yesterday evening was welcome, providing more flexibility in terms of socialising. The decision was based on evidence of fallen hospitalisation and death rates, but also the success of the UK vaccination programme. This is not the end game, but it's a real positive step, especially for service sectors in their ability to increase revenues and earnings and overall economic growth. Thank you for watching.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.